Hi traders, Jeffrey Friedman, Senior Commodity Broker with RJO Futures, coming to you from the CME Group trading floor with comments on stock indexes for this coming up week. Last week was damaging on the charts. A little bit about why we were overbought, up about 13 to 14%, little overbought. We had a lot of outside markets going down like gold and a lot of margin calls last Monday. So it put a lot of pressure on overbought conditions, raising cash. But looking at some of the economics globally as well as in the United States, China is showing signs of the third and fourth quarter should be much stronger. So China should have an influence to the upside. We're in the middle of earnings, and so far earnings have been kind of a mixed bag, with a lot of the techs being not as good as we were hoping for, such as Apple or Google. But have said that, looking at some of the reports that came out already, we had manufacturers that were weaker than we wanted. CPI was weaker than we thought. Housing, for housing starts and permits, was very strong, but the permits were not as strong as the actual starts, and permits are actually more important than the starts itself. That's future thoughts on breaking ground. Philadelphia Fed was weaker than we thought. Coming up for this week, we have more housing, which is new development, which is only 25 to 40% of the housing market in general. We have durable goods, which should tell us how the retail is going to go. GDP, which is a looking back index for the economy, and Michigan sentiment, which probably is going to be very important. So we've been up quite a bit. We're a little overbought. My concept right now is 2 weeks ago we were very bullish. 2 weeks ago we rallied up 35 points in the S&P. Last week we broke about 35 points. So we're still up about 12 or 11% for the year, and we're only in the middle of April. A lot of people think that we need a correction. We do. It would be very healthy. One number on a technical point of view, looking at the S&P June contract, would be a close under 2 days in a row under 1530. We're underneath the 20-day moving average. We're underneath the 10-day moving average. If this market is going to get bullish to the upside, the S&P June contract needs to close above 1572. 1573, somewhere in that area, so keep that in mind. Of the three indexes that is most popular with futures, the NASDAQ June contract is the weakest, the Dow is the strongest, and the S&P is probably right there in the middle. So if I had to classify it on a technical point of view, the S&P futures are sideways to down. The Dow is sideways only on a short-term basis, and the NASDAQ future contract is in a short-term downtrend. Long-term and medium trends are still pointing up, and I gave you some numbers in the S&P. Remember always, traders, trading futures or option to futures involves risk of loss, not suitable for everyone. You should be calling me, Jeffrey Friedman, Senior Commodity Broker at RJO Futures. If you'd like more analysis, fundamentally or technically, on any markets, and I'll leave you with good luck and good trading.